Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your El Paso real estate market update for February 2026. Here's what we got going on today. So we're going to start off with our existing homes and give you some information about that. You can see our charts here. Inventory has crept up just slightly. Sales flat. Pendings flat. Let's go to the specific report here. So first off, sales were down 6.78 year over year. So February 2025 versus February 2026, we were down just 6.78, 413 sales in 25, 385 in 2026. Months of inventory is up. It's risen just a little bit, almost 25%. That gives those buyers out there more choices than what they had last year. And with the fewer buyers out there, that really gave them an expanded market to be able to look at. So we had 3.47 months of inventory in February 2026. Average selling price went down. We would expect that just a little bit, but as I get into the FHFA charts here in just a minute, we're going to see that the market actually had an increase as we closed out 2025. So average price 276, 266. Size of homes went down to 1,840 square feet. It's pretty much been the same thing for the last 3 or 4 years. Good size 3-bedroom home, 4-bedroom home, depending on whether you've got that formal living room, formal dining room or not. Price per square foot is up 1.43% year over year, and that tracks with our numbers right here. And days on market, pretty much flat, 54 compared to 53 last year. That's just one of those market activities where it's taking a little bit longer to get the homes sold from the time it goes on the market to the time we close and transfer ownership from seller to buyer. Now, onto our new homes report, we're seeing somewhat similar. Sales were somewhat flat. But the pending contracts, that's the big thing that we're looking at right now, is that we did see a decrease in the pending contracts, and that's surprising because of the fact that inventory is, well, it's just slightly down. We'll get to that in just a second. But the builders, a lot of them have been offering huge incentives to the buyers to get properties under contract. So as we get through here, sales were down 3.54% year over year, only 218 sales in the month of February 2026, and that was after an off month in January 2026 and a really off month in December. So the sales have dropped, home starts have slowed just a little bit, even going into the spring season. Months of inventory is down 14%. We're at 5.17%, but really cut that in half because there's a builder putting a house on the market today that they haven't even started. Meanwhile, there's some that are over here finished. So if we just cut that number in half, we're probably at about 2.75 to 3 months worth of real inventory that somebody could buy and move into within the next 30 to 45 days. Average price is up 324, 433. Now that's a key thing to look at right there because we start talking about affordability. The prices have increased so much since the COVID years, but wages have not kept up. We only had like a 14, 15% increase in our wages, whereas prices have gone up clearly 50%. We'll look at that in just a second. Average size home is down 1,869 square feet. This is one of the few times that we've actually seen the new homes giving a larger sale, a larger house than what the resales were during the month of February 2026. Nothing real significant about that. They are paying more money for it, so you would hope to get more, but this is one of the few times where we've seen those numbers not correlate with the new homes being more expensive and getting less for your money. Price per square foot, $178.64. In days on market, 127 compared to 110 last year. That has to do with the number of sales that we had during the month of February 2026 versus 2025. Now, on to our FHFA annual appreciation. The charts I'm about to show you are from December, the end of December 2025. They've gathered the data, they correlated, they put it all together, and here's what they said. We actually had an increase as we closed out 2025. We had a 5.15% increase in Q4 2025 after coming off of 2 consecutive decreases where in Q2 we had a negative 0.7 and a negative 0.26, but then we made up for it with a 5.15% appreciation during Q4 of 2025. That's pretty big. We're not seeing the same thing with our neighbors to the north and to the west in Santa Teresa, Sunland Park, and Las Cruces, New Mexico, and I'll show you that in just a second. But overall, 144% increase in the last 20 years. So real estate for me, that's a big deal. And let me put my plug in for A House for Every Child. If you haven't signed up for that yet, you're going to want to do so. Go to ahouseforeverychild.com and sign up for it, because this is where I was able to pay for 2 weddings in Q4 of 2025 because of this appreciation and the assistance of tenants paying down the mortgage on the properties. Now, on to our candlestick report. You can see that we had an overall 4.9% appreciation in 2025. That's pretty big, almost 5% after having 4.3 in 2024, 7.6 in 23, 9 in 22, and there's our big one at 18.7% back in 2021. So we've clearly had over 50%, almost 60% appreciation in our marketplace since COVID came on in March of 2020. Hard to believe that was 6 years ago that we got that news that said, hey, the world is shutting down because of the COVID pandemic. Now, on to Las Cruces. They had a negative 0.3%. Essentially, it's flat. They didn't really have an increase, no decrease, pretty much the same as what they had previously. And on the candlestick report, negative 0.3% in 2025, pretty much a flat market in Las Cruces, which includes Santa Teresa, New Mexico, and Sunland Park, New Mexico, which essentially are our market here in the El Paso area. Now, mortgage interest rates. Here's the big news right here. Mortgage interest rates hit their low last Thursday the 5th of March, 2026. They hit 6% nationwide on a 30-year mortgage. This data comes from the St. Louis Fed. That's actually the lowest point that we've had since September of 2022, and that is likely to spur on some buyer activity here in the springtime of 2026. Lots and lots of numbers, but that number is big that we hit that 6% mark, the lowest point that we've had in over 3 years. Here is the index returns. We've got a couple of negatives on the 1 month for the S&P 500, the mid-cap 400, and the small-cap 6. 3 months numbers are positive right there. So all depending on where you want to put your money, I'm still a big advocate of real estate because it provides housing, which is one of Maslow's hierarchy of basic needs. So it works for me. And 3 key takeaways. Number 1, lower mortgage interest rates will likely spur on activity for the buyers in the coming months, especially with the buyers having more inventory to look at here in March of 2026. Increased buyer activity, though, will likely push those prices higher. That's just the supply and demand curve as we get into our basic economics. And the big issue is affordability, the biggest obstacle to increasing home ownership in El Paso and the U.S. as a whole, because our wages have not kept up with that inflation on houses. So that's our report for the month of February 2026. And if you've got questions on how this affects your potential home purchase, your potential home sale, or maybe you're looking at getting into the investment game, again, attend our seminar coming up on March 28th. ahouseforeverychild.com is where you can register for that. You can call me at 915-588-1850, and I'd be happy to visit with you about how you can participate in that free consumer seminar where we will teach you how one investment property can pay for college, weddings, or just a head start in life. For now, thanks for watching. God bless you, and make it a great day. Bye-bye.